Hello, good evening. Welcome to my channel Value Connect, and this channel is made for the purpose of understanding the indexes and the option strategies on weekly expiries and monthly expiries. So let us start for Nifty's view for next week expiry. I try to do the trading on a weekly expiry in Nifty and Bank Nifty on monthly basis, as well as in Sensex on a weekly basis. So first, let us see what is the overall view in Nifty. If we look at Nifty chart in December 2023, from 21,521, it went up to 26,300, which is in September 24, and it again sank to 21,973. So almost 5,500 points fall from October 24 until March 25 was seen, and again Nifty has started going upside. It has started giving upward movement again. If we see, this was the first tip move, and again at this level it went down. So overall, this was the upside, 26,301, drop up to 21,500, and again shifted to 25,300. From here, it has given the support and resistance zone. If we look at it, this is forming the channel, and now we will see what will be the next stage here when it is again reaching to same level of 26,301. Everybody is expecting that sooner it will be crossing 27,000 by end of December. But instead of that, we will see what will be the next move, as there is weekly expiry on 16th of December. So let us focus on it. This is the view on 1 day basis, 1 day time frame. Coming back to the smallest time frame here, we will see. Now we are here on 5 minutes chart. So here, if we look at 9th of December, from this level around 26,000, it has broken to the level of 25,700. So this will be our view. Here we can see this is the resistance near 25,900, 25,800. Today Nifty closed at 25,898, and when it started this morning, it was somewhere starting near this level, and this was the channel. After 2 o'clock, this went into the sideways and stopped here. So what happens? If we have to really look into the trade tomorrow, we should think of 26, 25,898 is the close. So 25,900 and 26,000 should be the next expiry levels we should think of on call side. 25,900 C and 26,000 CE for 16th December. For downside, if we have to think of P, this is the base where Nifty has taken continuous support first, second, and third, and now it is as per technical charts. If this is forming support 3 times, that means there is quite a possible opportunity to think of call side. If not, the put will be possible if Nifty breaks below 25,830. So let us see what will be the charts indicating for these 3 strikes here: 25,100 CE, 26,000 CE, and 25,800 PE for 16th December. Sixteen 25,100 call is showing the same thing. If we have to trade in 25,900, CE, this should be bought above 130 with stop loss of 110. What it will give you? First of all, why 130 and why stop loss of 110? Keep in mind the lot size is 75. Lot size is 75 quantity in Nifty, 75 numbers, and we are talking about 20 points stop loss here. That means into 20, it comes to around 1,500 rupees stop loss. In some cases, we just go for 10 point stop loss, as if we are sure that the move will be quite trendy. In that case, we simply take stop loss of 10 points. The purpose of having such a small stop losses is that instead of just losing the patience and wait for or hope for Nifty's trend change, we keep our positions on hold for and occur into big losses. So it is important to understand what should be our risk taking appetite and wait further for the upside moves that will be benefiting or giving good profits to us. In any given day, on any given day, if we are trying to trade in Nifty, we have to just secure first 5 to 7% in any call, which will be good gain, reaching 7% profit in one shot. So let us understand how. So here I will say that around, if the 130 is entry, it is very simple. If it is trending upside, the important is to break this resistance. If this resistance is broken, the next side will be around 160. Target will be 160. Now, is it possible to achieve this 160 target in one shot? No. So better we break our chart in 1 minute time frame, which is always good to trade in 1 minute time frame chart to understand what are the candle moves, and whether we can sustain with the stop losses, or we want to end up with cost to cost if there is any reversal in Nifty. I go to 1 minute, which gives very clear picture. Now let us understand how we reach to the target of 160. Here we can clearly see that at 115 and 108 it is making small box. It has to come out from this box, and the safer side we said that around 130 we will take the entry. This is our resistance zone, and our stop loss, as we said, that 110 should be the stop loss as it is making moves. Okay, so in short, this box has to be broken and Nifty should go up and take support and come back upward. This is the idea. Now, coming back to the visualization, why 160? It is always now my eyes are set to the chart, so I can easily say that it will reach to the target of 160 provided the trend is upside, and we can make good money out of it. So say here we are talking 130, entry at 130, and this will be 142. Let me move this side. It will be easy to horizontal line. So this will be my first target, 135. Why? Because this is taking U-turn here and making move. We will go into minute details to easily understand how it will happen. Now, this is 135 and next target will be 143. Why? Because from the past, this has touched to the level of 143 and came down. And then we reach to the next target here, which is 171. But before that, we take another small note here of 165. Why? Because if we see, this has given reversal on 10 December from 171 and came down. So if we look at the complete move, we have target of 171, but very safe target, as I said, if we enter at 130, our target will be 135, 140, 150, and 160. So you can keep it in mind for 2000, 25,900 call for Nifty with 16 December expiry, and you will understand how it works. For now, we will stop here to understand. Go to your laptop or your mobile app and try to understand. Open the chart. If you are technically sound, you will come to know that how the levels are made. Try it tomorrow, and we will have next session for upcoming expiries tomorrow. Till then, thank you very much.